Hey dreamers, my last full portfolio update was at the end of last quarter in June, so it's about that time to do another one. In December, I plan to recap the year with one last look and give you a forecast for 2023. But for today, I'll go through my full portfolio that generates over $81,000 in dividend income with all the up-to-date changes, how that compares to where it was at the end of last quarter, and at the end, I'll discuss an interesting side effect that is actually affecting my dividends, and it's a key learning for any investor. So let's dive in. So here we are in my spreadsheet, and just to orient you, I've got the ticker symbol, description, quantity of shares that I own, the last stock price, which was run on the last day of September, the next X date, next pay date, current dividend yield, the value of those shares across both my TD and Fidelity accounts, the total dividend annual income from that position, what sector and geography that position is in. And as a bonus, I've filled in whether or not this company is a dividend king with over 50 years of dividend increases, a dividend aristocrat with over 25 years of dividend increases, a dividend contender with between 10 and 24 years of dividend increases, whether they are a Canadian dividend aristocrat with the definition of market cap 300 million and over and 5 years plus of growth, or a UK dividend king, where they must have maintained or increased the dividend every year since 2000. So over 20 years. So with that, my number one position is ticker symbol MO Altria. I've got 3,461 shares. It has a current yield of over 9%, almost $140,000 worth, and it generates over $13,000 in annual dividend income. Altria just announced a dividend increase of 4.4% at the end of August. Thanks, Mo. My number two position is BCE, a Canadian telecom. I've got 2,915 shares with a yield of 6.52, a current value of $122,000, and it generates over $8,107. My third position is BTI British American Tobacco. I've got almost 3,250 shares. It's at its 7.83 yield, just over $115,000 worth, and it generates $9,289. IBM is number 4 with 715 shares. It has a 5.43 yield, almost $85,000 in current value, and it generates $4,718. Now, as you can see, the top 4 positions are all either a US dividend king, a UK dividend king, a Canadian dividend aristocrat, or a US contender. But as we know, AT&T recently fell out of their distinction of being a US dividend aristocrat when they recently cut the dividend. I really hope that with the recent cash infusion that AT&T starts to turn itself around. I've currently got 5,183 shares at a 7.15 yield, and it generates $5,754. The next position for me is my favorite REIT, none other than Realty Income, ticker symbol O. I've got 1,146 shares, a 5.16 yield right now. Woo, really nice. And it's generating $3,408. Next we have Philip Morris, 736 shares, 5.9 yield, generating $3,740. Pfizer is my next biggest holding with just over 1,000 shares, 3.62 yield, generating $1,652. My next biggest position is Chevron with 270 shares, 3.92 yield, generating $1,531. And rounding out the top 10, I've got Verizon with just over 1,000 shares, 6.75 yield right now, generating $2,632. And so in my top 10, I have $791,000 in current value, generating $53,850 just in the top 10. So let's keep going. The next one on the list is AbbVie. I've got 268 shares at a 3.95 yield right now, generating just over $1,500. My next stock is BNS, or Bank of Nova Scotia. Man, I love this bank. I've got 713 shares, a yield of 6.59, and an annual income of $2,146. BNS is a Canadian dividend aristocrat. And the next one on the list is another Canadian dividend aristocrat with just under 2,000 shares and a 6.33 yield. I've got MFC, or Manulife, generating $1,959. My next position is Duke Energy with 306 shares, a yield of 4.23, generating $1,231. The next one is my marijuana REIT, IIPR, and this one's probably the riskiest position I have and the most controversial. I've got 308 shares, an 8.17 yield, and it generates $2,217 a year. Then I've got Microsoft at 116 shares, generating $315 a year. Shaw Communications is my next position. At just over 1,000 shares, it generates $898, followed by Franklin Resources with 1,073 shares and a yield of 5.23, then generates $1,244 a year. I've got Starwood Property, which is a commercial REIT, 1,188 shares at an over 10% yield right now, generating $2,280. And rounding out my top 20 is MetLife. I've got 337 shares at a 3.27 yield, just under $675. So let's take a look at the next 10. I've got Algonquin Power, a Canadian utility company, at just over 1,500 shares and a 6.5% yield, generating just over $1,000 in dividend income. Avgo is one of my favorite chip makers. Each of these shares are pretty expensive, so I just have 37 shares, and it generates over $600. CFG, or Citizens Financial, I've got 475 shares at almost a 5% yield, generating just under $800. Stag is another commercial REIT with almost 450 shares and over 5% yield. It generates $650. Sunoco is an oil or energy company. I've got 314 shares there, an 8.5 yield, generating about $1,000. Now BST is a REIT ETF, and this is one of those canaries in the coal mine that I'm watching. I've got just over 400 shares right now at an incredible 10% yield, and it generates over $1,200. Good is another commercial REIT that I've had for a while. I've got 751 shares, and it generates $1,130. Pepsi's next on the list, one of my favorites. I've got 65 shares, it's a 2.76 yield, and it gives me just over $300. Now SCHD is a position I've been building up recently. I'm up to 155 shares, just over 4.5 yield, and it's given me $463. And so to round out the top 30, we've got Southern Company. With Southern, I've got 150 shares, a 3.9 yield, and it gives me about $407. In the next 10, I've got Johnson & Johnson, Apple, Prudential, Texas Instruments, Public Storage, Janus Henderson, Intel, WP Carey, BMO, Bank of Montreal, and GSK, which is GlaxoSmithKline. In this 10, I've got $72,490 invested, generating $3,132. And you can see that's across a broad array of healthcare, infotech, financial, real estate, and healthcare, and across the US, Canada, and UK. And in the next 10, I continue my Canadian bank roundup with Canadian Imperial Bank, followed by Lowe's, Principal Financial, Procter & Gamble, Qualcomm, Devo, a dividend-driven ETF, Tullis, Getty Realty, FRT or Federal Realty Investments, and EBF. I've got another $33,000 invested here, generating just over $1,421. And that leaves me with the bottom 22. In here you see positions I've had for a while, in addition to some new ones. And if you've been following me for a while, you know that I like to start a position with a few shares and then just build on it over time. And so there's a few of those in here. Notably, here's my new Fortis position at 62 shares, generating a yield of 4.29, and is kicking off about $85 so far. I also have McKesson in here, which is another relatively new position for me and is more of a dividend growth play. BBN is my bond ETF, which is acting as my canary in the coal mine for bonds. Cintas is another new position for me, with only 3 shares and about $1,000 in holdings. You'll also see Mondelez, with about $1,000 in a starter position here, and also ADP, with about $700 in holdings. And I also hope you've noticed that throughout the entire time I've been reviewing this, how many of my positions are either a king, an aristocrat, a contender, or a Canadian or UK dividend aristocrat. And so the grand total of my portfolio right now is, I've got 33,901 shares at a 6.14% average yield, with assets just north of 1.3 million, generating $81,614.69 in annual dividend income. And so if you look at my portfolio by sector, you can see the largest slice is consumer staples at 25%, followed by communication services at 20%. Then I have financials at 13%, infotech at 12%, and real estate at 10%. If we look at this from a geographic perspective, you can see 67% is in the US, followed by Canada at 18%, UK at 10%, and essentially this is Philip Morris. And these percentages are relatively unchanged from June or even the beginning of the year. And another way to look at my portfolio is what I call the long tail, where I have significant concentration at the top of the scale, but balanced somewhat by a lot of diversification of sector and geography outside of the top 10. Now, in the beginning, I mentioned I would discuss a learning that's affecting my dividends, and here it is. When I look at comparing my dividends now of $81,614 to my dividends at the end of last quarter in June, you can see my dividends were actually higher at $81,823. And I owned less shares, owning only 33,146 shares. So what gives? Well, there's a couple of things. One is that I've purchased some new dividend growth stocks that are at a much smaller yield. Things like Mondelez, Cintas, McKesson, SCHD, and Fortis. But that's not the bulk of the change. What's really affecting my dividends is the foreign exchange rate. And as you can see here, the US dollar has gotten very strong just in the past month against the Canadian dollar. And the same thing has happened against the British pound. And so that's a really important learning for any investor. Because as you can see here, I have a significant part of my portfolio, about 30%, in foreign stock. And in a smaller quantity, in a smaller portfolio, you may not notice it as much. But here, in my portfolio, you do. I'm estimating I'm losing somewhere in the neighborhood of $2,000 to $3,000 off of this annual dividend income estimate right now, just due to the currency exchange rates. The good news is that as the dollar weakens and things balance out, this will normalize. But it is something to think about if long term you rely on that income to live off of. Well, that's it for today. I hope you enjoyed this dividend portfolio update. As always, I encourage you to do your own research, then implement and learn by putting it into practice. As a reminder, I'm not a financial advisor, so keep in mind these videos are for entertainment and inspiration only. I'll see you on the flip side.